Today I want to walk you through something most traders never fully understand, and that's how your trading environment affects your results. This isn't just about strategy, it's about structure, risk, and how to actually survive long enough to become consistent. Let's start with how Genesis 10X actually works, because this is where a lot of confusion happens. Genesis uses what's called a 10X structure. That means your deposit gives you access to a larger trading account size. So, for example, a $125 deposit creates access to around a $1,250 trading account. A $250 deposit becomes around $2,500. Now, here's why many traders compare this to prop firm environments. In prop trading, you are usually given access to larger capital, so you can trade with meaningful position sizes while still controlling risk. Genesis creates a similar experience because you are operating inside a larger account structure instead of a very small personal account. This changes how trades behave. It allows smaller lot sizes to still create measurable movement. It allows structured risk percentages. And it creates an environment where beginners can practice trading with scale instead of feeling like they are trading a tiny account where nothing moves. The key difference is that Genesis does not require passing a challenge phase before accessing that structure. But just like prop trading, the responsibility shifts to risk management. More buying power does not mean more aggression. It means more discipline. Now that you understand how the 10X structure creates a larger trading environment, let's talk about why many traders prefer this model. One of the biggest struggles beginners face is trading very small personal accounts. When an account is tiny, traders often feel forced to increase risk just to see meaningful movement. That leads to oversized positions, emotional decisions, and accounts disappearing quickly. Operating inside a larger structured account changes that experience. Because the account size is larger, traders can use smaller lot sizes while still seeing real movement. This helps beginners focus on process instead of chasing fast profits. Another reason traders like this model is simplicity. Traditional prop firms often require passing evaluations, hitting profit targets, or avoiding strict rule violations before accessing funding. Genesis allows traders to begin learning inside a structured environment immediately. Now, that doesn't mean it's easier. It means responsibility shifts toward discipline and risk management. The environment gives you tools, but success still comes from how you use them. Before we talk about lot size, we need to understand something very simple called contract size. Because with Genesis, they use mini contracts with indices. Think of contract size like the size of a dollar multiplier. Every time price moves, the contract decides how much money moves with it. Let's make this very simple. Imagine two people take the exact same trade on US30. Price moves up by 1 point. Trader number 1 is using a standard US30 contract. That 1 point might equal about $10. Trader number 2 is using a smaller contract. That same 1 point might only equal about $1. Same market, same movement, different money result. And this is where beginners get confused. They think price movement is the same for everyone. But how much money moves depends on the contract size they are trading. The market isn't more dangerous. Your exposure is just bigger. Now, let's look at what happens when you actually place a trade. Because beginners always hear about lot size, but nobody shows what the numbers actually look like. Lot size is like a volume knob. It controls how much of the contract you are using. Let's use a simple example with US30. Imagine you place a trade using a 0.01 lot size. If you are trading standard US30, 1 point of movement is roughly $10. So, if price moves 10 points, that's about $100. If price moves 50 points, that's about $500. Now let's take the exact same trade, same entry, same 0.01 lot size, but using US30 Mini instead. On US30 Mini, 1 point is closer to $1 instead of 10. So now, a 10-point move is about $10, and a 50-point move is about $50. Nothing about the market changed. The only difference is how much money moves with each point. And for beginners, this smaller exposure gives you room to learn without large swings in your account. Now let's talk about the 3 golden rules that protect beginners inside the Genesis environment. And this is where I want to be very clear. Yes, if you deposit $125, the platform may show an account of $1,250, but that does not mean you suddenly have $1,250 to risk. Your real risk capital is still the $125 you actually funded, because if that equity disappears, the account is done. So, rule number 1 is understanding the difference between displayed account size and real risk. The larger account gives you structure and buying power, but your mindset should still respect your original capital. Rule number 2 is small lot sizes, especially on fast-moving markets like gold or indices. Gold moves quickly. If you treat the account like fully funded capital and increase lot size too fast, losses can happen much faster than beginners expect. Rule number 3 is survival over excitement. The purpose of this environment is not to trade bigger immediately. It's to allow smaller controlled trades inside a larger structure, so you can learn risk management without blowing your account. This slide is the cheat code for beginners because lot size is what blows accounts. Here's how to read this table. Left side is your deposit tier. Middle shows your 10x capital. Then it shows your recommended lot size range and the approximate risk. So, if you're tier 1, $125 deposit becomes $1,250. Your lot size is 0.01, and your risk per trade is roughly $3 to $6, which matches that 0.25% to 0.50% safe zone. Tier 2, $250 becomes $2,500. Your lot size stays small, 0.01 to 0.02, and your risk range is about $6 to $12, and so on. Now here's the most important line on the whole page. Only scale up after 20 plus, disciplined trades and stable emotional control. Translation: don't increase because you had one good day. Increase because you proved you can be consistent. This slide shows the path. Beginners need a path, or they start gambling. Phase 1 is beginner. You learn the platform, you trade 0.01 lots, and you keep risk under 0.5%. Your goal is literally written here: consistency, not profit. Phase 2 is consistent. You earn this by doing 20 plus disciplined trades, controlled risk, and emotional stability. Then you slightly increase lot size and keep journaling. Goal: build a track record. Phase 3 is scalar. Now you focus on compounding gains, structured entries, and possibly multiple positions, but still controlled. Goal: grow the account steadily. Phase 4 is funded pro. That means risk control is second nature, execution is consistent, and you think long term. Result: sustainability. Not just a lucky week. This is the beginner survival formula. 3 pillars. Number 1, small risk. You stay at 0.25% to 0.5% per trade. This is how you survive the learning curve. You keep losses small so you can come back tomorrow. Number 2, execution. Your edge isn't some secret strategy. It's your ability to follow your plan and log every trade. Most beginners lose because they change rules mid-trade. Number 3, scaling. Scaling is data first. You don't size up because you feel confident. You size up because your journal proves you're consistent. And the bottom line of this whole slide: primary objective is longevity over fast profits. Quick but important. This is the risk disclaimer. Trading Forex and CFDs on margin is high risk. You can lose some or all of your deposited capital. So never trade money you can't afford to lose. This presentation is for educational purposes only. This is not financial advice, and past performance doesn't guarantee future results. You're responsible for your own decisions, and the goal of this framework is simple: reduce risk, increase discipline, and trade with structure.